All right, everyone, get ready for a deep dive into some financial news from December 23rd, 2024. And man, it's a lot to unpack, let me tell you. We're going to be talking soaring stocks, metals taking a surprising dip, and crypto. Well, crypto is making headlines as always.
Yeah, what's fascinating to me is how these seemingly separate stories, they all connect in a way.
Yeah.
We're going to see how political decisions, they can really ripple through the markets. We've got global trends kind of clashing, and even just everyday consumer choices, they all play a role in shaping this whole financial landscape.
Absolutely. So we're looking at a mix of market trends, company news, and we're going to do a deep dive into both the crypto world and what's happening with metals. I think it's going to be a wild ride.
Yeah, definitely. Buckle up, because we've got a lot to cover, and I think you'll find some of these stories, well, they're pretty surprising. Like, did you know there's actually talk of a U.S. Bitcoin reserve?
A Bitcoin reserve. Wow, okay, I did not know that.
Yeah, and we've also got a major tech company that might be, thinking about buying a crypto firm.
Okay, now that's definitely got my attention.
Right.
And then, of course, we have the whole battery metals situation. I thought demand was supposed to be going crazy with the EV boom.
Right. You'd think so, wouldn't you?
Yeah, but it sounds like things aren't exactly going according to plan.
Yeah, there are definitely some interesting dynamics there that we'll break down for sure.
All right, well, let's start with the U.S. stock market, I guess. I mean, it's been on a tear this year. The S&P 500 up a huge 24%. Seems like everybody's making money. Are we setting ourselves up for a crash, though?
Well, that's the big question, right? And it's true, the U.S. economy has been incredibly strong, and that's been attracting global investment like crazy,
Yeah.
driving up the dollar, too, by 7%. You're right to be cautious, though. Whenever you see this kind of excitement, this euphoria in the market, it's always wise to kind of wonder, how long can this really last?
Right. So is this just a classic case of, irrational exuberance, or is there something more to it, something behind this rally?
You know, I think it's probably a bit of both,
Yeah.
honestly, as is often the case in these situations. On the one hand, you've got some pretty solid economic fundamentals that are, driving that growth.
Right.
But then on the other hand, you've got speculation and maybe some complacency starting to creep in.
So what are the warning signs then? What should we be looking out for that maybe this party's about to end?
Well, one key indicator that analysts will look at is something called market breadth. Think of it like a party where only a few people are actually dancing.
Okay.
It might look fun from a distance, but it's not necessarily a sign of a truly great party.
Yeah, I like that analogy. So if it's only a handful of stocks driving the rally, that's a red flag.
Exactly. It means the gains aren't really broad-based, and the market could be vulnerable if those few high flyers, if they stumble, the whole thing could come down.
Makes sense. What about investor sentiment, though? If everybody's feeling really optimistic, could that be a sign of trouble as well?
You're absolutely right. When everyone's convinced the market's only going up, 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 that's often when things start to get a little shaky. We've seen it time and time again throughout history.
Yeah, we can't forget about the whole Santa Claus rally thing either.
Oh, right. Yeah.
What's that all about, and what could it tell us about where the market might be headed?
Yeah, the Santa Claus rally, that's the tendency for the market to go up in that last week of December and the first couple trading days in January.
Okay, so if we don't see a Santa Claus rally this year, maybe investors are, I don't know, losing their holiday cheer.
Could be. Yeah. It could suggest that maybe that bullish sentiment is starting to fade and a correction, could be coming.
Okay, so there are definitely some reasons to be cautious, especially with how high valuations are in the tech sector.
For sure.
Speaking of tech, let's talk about those magnificent seven companies. You know, the ones, they're dominating the headlines, dominating the market. Now they make up a third of the S&P 500's value.
Mhm.
NVIDIA and Tesla in particular, they've had an incredible run.
Yeah. And that's what's making some of those seasoned investors kind of nervous. They're starting to see some parallels to the dot-com bubble back in the late 90s
Oh, no.
when, tech stocks soared to these crazy levels that just weren't sustainable, and then boom, they crash back down.
That's a scary thought. Are we really about to repeat history?
I mean, it's never an exact analogy, but there are definitely some echoes of that era in today's market. One person who's been pretty vocal about this is Jeremy Grantham. He's a, legendary investor known for spotting these bubbles,
Yeah, I've heard that name.
and he's pretty skeptical about this whole AI-driven surge we've been seeing.
So what's his argument exactly? Like, what do these high valuation metrics, what do they even mean for the average investor?
Basically, his argument boils down to this. The current valuations of a lot of these tech companies, especially those riding the AI wave, they're just not justified by their earnings or their realistic growth potential. In other words, they're overpriced. And at some point, that disconnect between price and value, well, it has to be reconciled, right?
So the music could stop at any moment, and those who are left holding the bag when it does, they could lose a lot.
That's the risk, yeah. It's important to remember that markets are driven by psychology as much as fundamentals. When fear takes over, prices can drop way faster than they rose.
Okay, so U.S. market's booming, but maybe we're getting a little ahead of ourselves. What's interesting, though, is that this isn't happening everywhere. Europe seems to be having a very different experience.
Yeah, that's true. While the U.S. is, riding this bull market, Europe's having a bit of a tougher time. The euro has weakened against the dollar, about 5.5%, and European stocks, they've been significantly underperforming compared to the U.S.
Huh. Why such a big difference? What's causing that?
Well, there are a few things going on. First, economic policies in the U.S., they've been a lot more focused on growth, creating a better environment for businesses generally. Second, there's this sense of global investor confidence in the U.S. that, you know, just isn't there for Europe right now.
It's like the U.S. is seen as a safe haven when things are uncertain globally. What about China, though? They've always been a bit of a wild card, but they still ended up with a decent gain in their stock market this year.
That's right, yeah. China's market, it's had its ups and downs, but it's still climbed by 14.5% in 2024.
So not as high as the U.S., but not doing as poorly as Europe either. Why is China charting its own course?
Well, China's government, they have much tighter control over their economy and financial markets than most countries. They can step in more directly to either, boost growth or slam on the brakes if they need to. Gives them a level of control other countries just don't have.
It's like they have a manual override for their whole economy. That's wild. All right, so we've got this tale of three markets then. The U.S. is charging ahead, Europe's lagging behind, and China's doing its own thing, as always. But let's switch gears for a minute and talk about cryptocurrency, because things are always interesting over there.
Oh, yeah.
Bitcoin hit a record high this year, but then it corrected. What's behind all that volatility?
I mean, there are always ups and downs in the crypto market, right?
Right.
But this recent roller coaster, it's partly due to, well, a familiar face, President-elect Trump.
The wild card is back. I should have seen that coming.
His pro-crypto stance, along with the possibility of, remember we talked about that U.S. strategic Bitcoin reserve. Well, that's sending shockwaves through the crypto world.
Yeah, a U.S. strategic Bitcoin reserve, that's a bold move. So Bitcoin is obviously the big name, but we can't forget about Ethereum and BNB either. How are they doing in all of this?
Well, Ethereum, it's held its own, showing some resilience in the face of all these swings. BNB, on the other hand, it's actually surged quite a bit, reflecting a broader positive sentiment, I'd say, in the crypto space.
It seems like crypto is becoming more and more mainstream. It's not just individual investors anymore, right? We're seeing institutions getting involved too.
Absolutely. Institutional interest in crypto has exploded in recent years. Hedge funds especially. They're making big bets on Bitcoin and other digital assets.
So even the big players are starting to see crypto as a legitimate asset class.
Yeah, I think so. I mean, look at Brevin Howard and Galaxy Digital, two major hedge funds. They reported really impressive gains from their crypto strategies just last month. All this institutional money, it's adding fuel to the fire, both in terms of growth and volatility.
Wow, so big money is seeing big opportunities in crypto. But let's shift gears again and talk about something a little more tangible. Metals. And this is where things get really interesting because there's been a surprising downturn in the battery metals market.
Yeah, definitely unexpected.
Right. Lithium, nickel, cobalt, they're all down. This is weird because these metals, they're essential for EV batteries, and the EV market is supposed to be booming.
Exactly. You'd think so.
I thought we were all supposed to be driving electric cars by now, so what's happening? Why are these metals slumping when demand should be through the roof?
Okay, well, there are a couple of factors at play. One is oversupply. There's just more lithium, nickel, and cobalt available than the EV industry currently needs. And another factor is that EV demand, especially outside of China, hasn't grown as fast as some analysts predicted.
So maybe we got a little ahead of ourselves with all the EV hype.
Could be.
But what about nickel and cobalt specifically? I know those are especially important for certain types of batteries.
Yeah, that's right. To understand what's happening with those, you have to look at what's going on in places like Indonesia and China. Indonesia has ramped up nickel production big time. And China, well, they're a major player in both nickel and cobalt. This increased production It's led to kind of a glut in the market.
I see. And it's not just oversupply affecting these metals, right? There's also China's strategic metals ban to think about. They've put restrictions on exporting gallium, germanium, and antimony. What's going on with that?
Ah, yes. This is where, geopolitics and the metals market, they kind of collide. These metals, they're crucial for all sorts of tech, semiconductors, solar panels, even defense systems. And by restricting their export, China's flexing its muscles on the global stage.
So it's a power play.
Exactly. They're basically saying, hey, we control these essential materials, and we're not afraid to use that to our advantage.
Bold move. What does this ban mean for the U.S. then and for the global market in general?
Well, for the U.S., it shows how risky it is to rely too much on one country for these critical materials. This ban, it could lead to price increases and supply chain problems for American companies.
So wake-up call for the U.S. to diversify its supply chains and be less dependent on China.
Absolutely. And for the global market, it just adds another layer of complexity.
Yeah.
More uncertainty in an already volatile situation.
Yeah, for sure. It's a reminder that geopolitics can really impact the availability and price of essential materials.
No doubt.
Okay, so we've got metals mayhem, geopolitical maneuvering, and a crypto market that's, well, unpredictable as ever. But before we spiral into a financial panic, let's talk about something that might offer a glimmer of hope. Good old-fashioned gold.
Ah, yes, the classic safe haven.
I know. It seems a bit old school in this digital world, but gold has always been seen as a safe haven, hasn't it?
It has, yeah. It's got a long history of holding its value, especially during times of uncertainty.
Right.
People tend to flock to it when they're worried about the future, and it's often seen as a way to hedge against inflation. But here's the thing, and this is what surprised me. Bitcoin ETFs now hold more assets than gold ETFs.
Wait, seriously, Bitcoin is more popular than gold now. I know crypto's been gaining traction, but this is gold, the stuff people have been hoarding for centuries.
Mm.
Is gold losing its shine?
It's not necessarily that gold is losing its appeal. It's more that Bitcoin is gaining ground as an alternative store of value, especially among those younger investors
Right.
who are more comfortable with, digital assets and maybe a little skeptical of those traditional financial systems.
So it's a generational shift.
I think so.
Yeah,
Your grandma might swear by gold, but your little brother, he's probably all about Bitcoin.
probably true, yeah. But it's not just about demographics, right? There's also that whole diversification argument.
Right.
Many investors are seeing Bitcoin as a hedge against inflation too, just like gold.
That's right. They're not necessarily ditching gold altogether. They're just adding Bitcoin to the mix, a way to spread their risk and maybe, capitalize on the growth of that crypto market.
It's like watching a financial revolution happen in real time.
Yeah.
Digital assets taking on the old guard.
It really is.
Yeah.
And it highlights how important it is to stay informed and adapt to these changes and, challenge our assumptions about how the financial world works.
Absolutely. What was once fringe or speculative is now becoming mainstream.
It really is.
It's exciting, but also a little overwhelming, to be honest.
Oh, for sure.
That's why we do these deep dives, though, to
Exactly.
try and make sense of it all.
And to help you make more informed decisions.
Exactly. So we've covered a lot of ground in this first part of our deep dive, from the battery metal slump to China's strategic metals ban, from the rise of Bitcoin to the enduring appeal of gold.
It's a lot to take in, but the key is to focus on those big picture trends and how they relate to you, your own goals, your own risk tolerance.
Right. We don't want anyone to panic or make rash decisions based on any one piece of news.
Absolutely not. It's about taking a long-term perspective. Do your research, understand the risks and rewards.
All right. So should investors be worried about the future then?
Worry is never a productive emotion when it comes to investing. What you should be is informed, engaged, and adaptable. The financial landscape is always changing, and staying ahead of the curve is key.
All right, listeners, we've explored some twists and turns in the markets today, from metals to crypto and everything in between, but we're not done yet. Stay tuned for part 2 of our deep dive, where we'll explore what all of this means for you as an investor. We'll delve into President-elect Trump's plans for the financial world, the future of those battery metals, and the ongoing battle between Bitcoin and gold. We'll also discuss how you can protect your portfolio, capitalize on opportunities, and navigate the risks of this ever-changing financial landscape. See you in part 2.
Looking forward to it.
Welcome back. You're right in the thick of our deep dive into the financial news from December 23rd, 2024. Man, if you feel like you need a financial advisor just to follow along with all this, well, you're not alone.
It's true. It can be a lot to take in.
That's why we're here, though, to break it all down and, help you make sense of this crazy market.
Exactly. We're
Mhm.
connecting those dots, figuring out the big forces at play and what it means for you, your money.
For sure. So let's pick up where we left off, okay? We were talking about the battery metals market and that weird downturn.
Right.
Lithium, nickel, cobalt, they're all down, which doesn't really make sense with the whole EV boom happening, right?
It does seem a little counterintuitive at first, but it starts to make sense when you look a little closer. The demand, it's definitely still there, especially with, the electric vehicle market. It's
Yeah.
expected to grow so much in the long term. But I think what we're seeing right now is a kind of a period adjustment, a rebalancing of supply and demand, I guess you could say.
Okay, so it's not that the whole EV revolution is stalling, it's just hitting a few bumps in the road.
Yeah, I think that's a good way to put it. Oversupply is a big factor, particularly for nickel and cobalt.
Hmm.
Indonesia and China, they've really ramped up production. And then there's the issue of, consumer preferences shifting a bit, like we talked about earlier. Not everyone's ready to go all electric just yet.
Yeah, we're seeing a lot of those hybrids and plug-in hybrids gaining traction, which, makes things even more complicated.
For sure. The type of battery they use, it's not always the same as the ones in fully electric vehicles. So that means demand for certain metals can fluctuate.
So it's not as easy as just saying EVs are booming, so battery metals must be booming too.
Yep.
We really need to, dig a little deeper and understand those nuances. What types of batteries are in demand? Where are they being made? How does all that impact the supply and demand for each metal?
You got it. It's all about understanding how everything's connected, on a global scale.
Like a giant puzzle, we're just trying to figure out how all the pieces fit together.
Yeah, like that.
Speaking of puzzles, let's talk about that other curveball, China's strategic metals ban.
All right.
They're restricting those exports of gallium, germanium, and antimony. Got everyone on edge. What's the strategy there, do you think?
Well, China, they're the main producer of these metals, which are, crucial for a lot of technologies, semiconductors, solar panels, defense systems. By restricting those exports, they're essentially showing off their power in the market, sending a message to the world.
And what message is that?
It's basically, don't mess with us. We've got control of these important materials, and we're not afraid to use them to get what we want.
Wow, it's a power play for sure. So what does this mean for the U.S. and its allies?
It's a wake-up call, that's for sure. It shows how vulnerable you are when you depend too much on one country for, such vital stuff. The U.S. and other Western countries, they really need to think about diversifying their supply chains,
Yeah.
investing in making these metals at home, and maybe even, exploring other sources.
Don't put all your eggs in one basket, especially when that basket's controlled by someone who might not have the same goals as you.
Exactly. It's a reminder that geopolitics and economics, they're deeply intertwined.
They are, for sure. Okay, so we've got metals madness, geopolitical games, and a crypto market that's about as predictable as I don't even know. But before we totally lose hope, let's talk about gold. Good old-fashioned gold.
Yeah.
Seems a bit old school, I know, in this digital age, but it's always been the safe haven, right?
Absolutely. It's got this long history of holding its value, especially during times of uncertainty.
Right.
People tend to run to it when they're worried about what's coming next, and it's a classic hedge against inflation. But here's the thing. This is what really got me. Bitcoin ETFs, they actually hold more assets now than gold ETFs.
Seriously. Bitcoin is more popular than gold. I mean, I get that crypto has been growing like crazy, but this is gold we're talking about. Like, the stuff people have been stashing away for centuries. Is it losing its shine?
I don't think so. I think it's more that Bitcoin is just gaining traction really fast as an alternative, a store of value,
Yeah.
especially with the younger investors,
Yeah.
the ones who are more comfortable with digital stuff and maybe a little less trusting of traditional financial systems.
So it's a generational thing, maybe?
I think so. Your grandma might still be all about gold, but your younger brother is probably, fully on the Bitcoin train.
Probably true, yeah. But it's not just about, who's investing, right? There's also that whole idea of diversification. Investors are starting to see Bitcoin as a hedge against inflation, just like gold. Part of their strategy to spread out risk and maybe, get a piece of that crypto growth.
Absolutely. It's not that they're ditching gold completely. They're just adding Bitcoin to the mix.
It's like we're watching this financial revolution unfold in real time. Digital assets going up against the old guard. And then we've got MicroStrategy joining the NASDAQ 100. That's a pretty big deal, right?
Oh, yeah, for sure. MicroStrategy, they've got a ton of Bitcoin, and now they're part of one of the most important stock market indexes out there, which means the NASDAQ 100 is exposed to the ups and downs of Bitcoin now, and that just makes cryptocurrency even more legit as an investment.
It's all really interesting, but also, kind of overwhelming.
Yeah, no doubt.
So many things going on, so many things to think about, so many risks and rewards. How is anyone supposed to figure it all out and actually make good decisions about their investments?
That's exactly why we're doing these deep dives, right? To help you understand all the forces that are shaping the financial world so you can make smart decisions for yourself. It's about connecting the dots, seeing the big picture, recognizing those patterns as they emerge.
Right. So we've covered a lot in this part, from that battery metals slump to China's strategic metals ban, the rise of Bitcoin, and, you know, gold still holding on strong.
It is a lot to absorb. But just remember to focus on those big trends and how they connect to your own situation, your goals, your risk tolerance.
Exactly. We don't want anyone making decisions based on just one piece of news or one little market fluctuation.
Right. Take a long-term view, do your research, and understand the risks and rewards of each type of investment.
Good advice. So bottom line, should investors be worried about the future?
Worry doesn't really help when it comes to investing. What you should be is informed, engaged, and able to adapt. Things are always changing in finance, so staying ahead of the curve is key.
Okay, I like that. Be informed, engaged, and adaptable. We've explored all these market twists and turns, from metals to crypto and beyond.
It's been quite a journey.
But we're not done yet.
Welcome back to the final part of our deep dive. It's been a wild ride, right? We've talked about market trends, company news, all that crypto craziness, and even some geopolitical stuff. But now let's get down to brass tacks. What does all this actually mean for you, for your money? How can you take what we've learned and use it to make smart financial decisions going forward?
Yeah, that's the million-dollar question, isn't it? Knowing what's happening is one thing, but actually knowing how to navigate all this and make smart choices, that's where it gets real.
Right. So let's start with the basics, okay?
Yeah.
What's the one piece of advice you'd give to any investor out there, no matter their experience level or how much risk they're comfortable with?
If I had to boil it down to one thing, it would be this. Be adaptable. Things change so fast in finance. What worked yesterday might not work today, and if you're stuck in the past, well, that's a recipe for trouble. So ditch the old playbook and be ready to, what, pivot, change direction when you need to?
Exactly. Embrace the fact that you're always learning. Be curious about new trends, new tech, new investment opportunities. Don't be afraid to question what you think you know and adjust your portfolio as you go.
We've talked a lot about President-elect Trump and how his policies might impact the market. A lot of people are wondering, how's this going to affect my investments? What should they be paying attention to in terms of, actual policy changes?
Keep a close eye on anything related to energy, especially fossil fuels and AI development. Those policies, they could really shake things up for utilities and energy stocks, both good and bad, depending on what he actually does.
So energy and utilities are sectors to watch. Got it. But what about those tech giants, the Magnificent Seven we talked about? They've been leading the charge. But is it a good idea to stick with them? Or is this bubble about to burst?
Ah, the age-old question. We talked about those concerns around overvaluation in the tech sector. A correction is definitely a possibility. But you can't ignore that these companies, they're innovating like crazy, they're making huge profits, and they have a ton of influence on the global economy.
So high risk, high reward.
Pretty much. If you're in tech, be cautious, diversify, don't buy into the hype, and be ready for some ups and downs.
Makes sense. Now let's talk crypto. It's been all over the place, with speculation, institutional investors jumping in, and of course, President-elect Trump being a big crypto fan. What's your outlook on this whole space? Is it the future or just a fad that's going to fade away?
I think it's safe to say crypto is here to stay. It's becoming a bigger part of the global financial system every day, and the potential for it to shake things up and create new things is huge. But we can't forget, crypto is still relatively new, and it's super volatile.
So buckle up. Proceed with caution.
Exactly. If you're diving into crypto, do your homework, start small, don't invest more than you can afford to lose. And diversification is key here, too. Don't put all your crypto eggs in one basket.
Speaking of diversification, we got to talk about those battery metals. We talked about that slump. But is this just a temporary dip, or is the EV revolution hitting a wall? What's the long-term outlook?
I think the long-term outlook for battery metals is still really good. The world is shifting towards electric vehicles. That's a powerful trend, and demand for these metals is going to keep growing. But like we said, the market is in a bit of a weird spot right now with that oversupply and people not quite as eager to go all electric as everyone thought.
So what's the advice for investors? Buy the dip or wait and see how things shake out?
Patience is key here. Don't panic and sell just because of some short-term fluctuations. Focus on companies that have solid foundations, a good vision for the future, and a diversified approach to, getting their materials and producing their stuff.
So the companies that are in it for the long haul, not just trying to cash in on the latest trends.
Exactly. Look for the ones that are investing in R&D, building those sustainable supply chains, and adapting to how the EV market is changing.
Okay, so we've covered a lot of ground today. Stocks, crypto, metals, even a bit of geopolitics. Any final words of wisdom for our listeners as they try to make sense of all this and navigate this crazy financial world?
The financial world is full of surprises. To succeed, you got to stay in the loop, be able to change with the times, and never stop learning. Don't be afraid to ask questions, get advice from experts, and be willing to question what you think you know.
Great advice. Well, that's a wrap for our deep dive into the financial news from December 23rd, 2024. It's been a wild ride for sure, but hopefully you've gotten some valuable insights, maybe sparked some curiosity, and have a few ideas on how to handle your own finances in the year ahead.
Absolutely. Knowledge is power, especially in the world of finance.
Couldn't agree more. Thanks for joining us on this deep dive. Until next time, stay curious, stay informed, and stay ahead of the game.